Good afternoon, everybody. Welcome to this meeting of. Good afternoon, everybody. We're welcome to this meeting of the Audit, Finance and Risk Committee, on the 16th of March. I'd like to invite Councillor Robinson to give us a Karakia. Sorry.
I was scheduled to do the Karakia, but I signaled this morning that's what I intended to do. So, kia hora te marino, kia whakapapapunamu te moana, e huarahi matatu I te rangi nei, aroha atu, aroha mai, tatu I atatu katoa, hui e takie.
Thank you. I'd like to invite Councillor Karakia to undertake a mihi whakatau. Thank you.
E mihi atu kia koe o te tiamana o te māngai mō o pukupuke o te kaunihere ki Waitaha o te tiamana o te putia o te tai o kaunihere o Waitaha. Mi atu kia koe o te Ian McKenzie o te māngai o Pākihi, mihi atu mō tō Karakia, Timatanga, he mihi. Tuatahi ka me nui ki te mihi atu ki tō tātou matanui taraki, ko i te Timatanga me te pakauti ko tau katoa. O reira ka mihi ki te kai omai o ka mea pai katoa. E mihi atu mō tō māngai o te taiao o kaunihere o Waitaha, o te tepu, i te whānau tautoko o te kaunihera o taiao, mihi atu kā koe te tūmaki e Stephanie, mauria mai whakako ki te kaupapa nui. O reira, a koutou rā, o tēnei mihi, mihi atu o te maukatapu nei o maukatere, mō tō māngai, mō tō whenua o Naitua Huriri. O reira, koutou rā, tēnā koutou, e mihi atu kia koutou katoa.
Kia ora, thank you. Welcome to the meeting. I'd just like to introduce Stefan Theron, sitting at the back of the room there. Stefan is taking over the role of audit assurance in place of John Gamba, who has now left the organisation. I've been informed that we have a quorum present, and I'm pleased to confirm and declare the meeting open. There's no change to the order of business. We have apologies from Graham Naylor and Graham McGlynn, our independent advisors, who are unable to make it today. Are there any conflicts of interest today? None. There's no public forum, deputations or petitions, and there's no extraordinary and urgent business. And there are no notices of motion that I'm aware of. So what we'll do now is move to item 7. Would you like to speak?
Kia ora, e te tiamana. I'd just like to make a statement, and it's based on the fact that just to acknowledge and thank the committee and also our support from our ringawera, our whānau, from ECAN in regards to changing the scheduled meeting to the meeting today. And I know, just to acknowledge that we had a very, very large delegation of ECAN councillors at Rapaki yesterday. The reason for it was actually to welcome international guests from SailGP, the crews of those waka. So thank you for changing it, and thank you to the staff. I know that it takes a lot of work actually to reschedule things. So Rapaki o te raki whakaputa, also Naito Whanui are very appreciative of that. Good.
Sure, thank you, Nook. And yes, though, councillors who attended them hopefully yesterday thoroughly enjoyed ourselves, and it was an important event. And yeah, best wishes to Sale GP. So we'll move to item 7.1, the unconfirmed minutes of our 1st of February 2023. Is there a mover? The seconder? John? The seconder? Councillor Southworth? All those in favour, please say aye. Opposed? No. Carried. Thank you. Now I'll move to item 8.1, which is the committee's resolution status. And I wonder if I invite Catherine to just come to the table and report on that. Thank you, Catherine.
Tēnā koutou, thank you for this. This is a report that gives visibility of the status of resolutions that have been made previously to provide you an update on where they're at. And you'll see that for most of your resolutions, they have been completed. There's a number of them that are going to come to the next March council meeting, and some of them are included in this meeting as well. So I'm happy to take any queries or to direct any queries that may be answered by the director.
Thanks, Catherine. Any questions or clarification? There are none. You may leave the table. Thanks, Catherine. I'll put the motion up on screen. Recommendation that the Audit, Finance and Risk Committee notes the status of previous resolutions provided in the status of Audit, Finance and Risk Committee Resolutions Report March 2023. Do I have a mover? Councillor Robinson, seconder. Councillor Southworth. All those in favour, please say aye. Carried. Thank you. So moving on to item 8.2, which is the Bancorp Treasury Report. If I could invite David Walker from Price. David is from PricewaterhouseCoopers. No, he's not. Bancorp, sorry, Bancorp. It's standing in for Miles O'Connor. We're just organising a presentation.
Right, thank you all. The dreaded 1 o'clock slot, eh? As you said, I'm subbing in for Miles O'Connor today, who normally does these presentations. Now, I prepared what I thought was a really good presentation as of last Thursday, last week, but the reality is it's pretty irrelevant now. In terms of the financial markets, things are important and not important until they are. And there's some significant things that have basically changed in the last week. If we go back to last week, the focus backtracking. So just if you're not familiar, Bancorp's role is to guide the council through its borrowings and its investments. So its focus is around interest rates. And if we look at interest rates from the focus last week as opposed to this week, last week, basically, the talk was all about inflation, the inflationary impacts of the cyclone, higher interest rates happening globally. And the talk was all about around higher interest rates and what that would do for New Zealand in terms of causing a recession, trying to reduce aggregate demand. That was pretty much the conversation. The conversation this week has changed completely. And it's one of those situations where I'll throw an acronym which is called FUD, which stands for fear, uncertainty, and doubt. And that's basically what the global markets are going through at the moment. And that's really a consequence of the banking crises that we've seen pretty much in the last week. It's quite incredible. Silicon Valley Bank, which was the 16th largest bank in America, basically went from a sort of a AA rating to pretty much in default in sort of 4 days. And so quite naturally, that's shaken confidence in terms of the rest of the banking community. So there was another one bank that was put into effectively statutory management the week before, another bank basically after. Those two banks were involved in the crypto market, so I don't think many can have too many sympathies about that. But in terms of Silicon Valley Bank, that was a genuinely large bank that's basically fallen into significant, basically default. Now, the thing about our crises and confidence is they spread really quickly. And so basically the latest situation that we're talking about now, it relates to Credit Suisse, which is probably a major bank that we've all heard of. So it's likely that they will have to be bailed out. But in the meantime, global markets, that they work in confidence, or they work on fear. And at the moment, fear is basically driving the markets. Now, what does that mean for us in terms of interest rates? Now, the fascinating thing about that is that, let's say last week, we were talking about higher interest rates. Since those events that we've seen since late Friday, some interest rates have actually seen their biggest fall since 1987 in the States, the 2-year rates. And there's actually now talk that basically the US might move to actually cut interest rates rather than increase interest rates. Now, the really interesting issue there is that, as I go back to the phrase, it doesn't matter till it matters. And normally the focus for central banks is inflation. Now, every now and again, the events occur that basically means that gets pushed to the sidelines. So it'd be really fascinating to basically see how the central banks, and particularly our central banks, deal with that sort of situation. Now, adding a little bit more colour to that sort of situation in terms of the scenarios that our Reserve Bank governor is having to deal with. I'm not sure if people saw the GDP numbers that came out this morning. Yeah, what was interesting about that, most of the banks actually forecasted a negative number. Pardon? No. But what the interesting thing there was that most of the New Zealand trading banks were forecasting a negative number. But the thing I find most interesting, the Reserve Bank at the February statement had actually been forecasting an increase of 0.7. So when you add that into the BICS, potentially you've got a very significant change in outlook for interest rates. And again, it's just a case of watching to see what the Reserve Bank do. Now, the thing about interest rates, it's not like equation. It's not like 1 + 1 = 2. We're dealing with sort of dealing with time lags in terms of Reserve Bank governor. We're dealing with personality types. It's going to be a very interesting situation to watch. But from the thing I find most fascinating is just the way that how significant things have changed in actually less than a week, which is the way that financial markets operate. So at that point, I'll take a pause and say just while I gather my thoughts. Any questions around that?
Yes.
I was going to ask a question into your paper around a number of questions about business and consumer confidence and GFC kind of comments and inflation, and kind of this week it's kind of going, the report was almost, it's last week's report and today is today, and you might think that we will see that a further reduction in confidence, but if interest rates do fall, where does that boost us again?
Sorry, when you say boost us, are you talking about the council or the economy? Oh, yeah. It's I find it fascinating is that the recession that we're going through at the moment is something that has been self-induced. The Reserve Bank has had to do this. Well, in terms of its mandate, it's had to do this to basically get inflation down. But it's something that has been instigated by the Reserve Bank to do this. So the very fact it's happened hopefully gives us some sort of comfort, because it's quite remarkable in the space of 4 years, we've gone from a situation where we were talking about interest rates being at 0 or negative for an extended period to the Reserve Bank forecasting 90-day rates or the cash rate of 5.5%. A significant swing.
The follow-up then, so there's talk that yes, interest rates could well ease if the numbers are correct. Would the Reserve Bank, I guess, see that as a particular risk and want to hold things in the interim so that they don't sort of reignite an economy if there's thought that interest rates of investment might pick up again?
But say it's not a 1 + 1 = 2 type sort of situation. Again, in terms of their mandate, it doesn't look like inflation is going to be sorted out for probably at least another year. And one of the concerns that the financial markets had was that inflation was going to be stickier than what everyone had thought. You know, even if you go back to January, you know, the markets were actually forecasting some falls in interest rates. But the key issue then, not so much now, is basically the consequences of wage inflation. And it's what they refer to as what the Reserve Bank was most concerned about is that people see prices go up, you know, their cost of living goes up, so therefore they want a pay rise. And then all the people that employ those people push up their prices to adjust for that, which becomes a really unpleasant sort of inflation cycle. Now, again, I find it interesting that a lot of people have thought that a little bit of inflation is actually not a bad thing, but you can see the consequences. Even, you know, the teachers' strike, for example, today, you can actually argue that a key part of that is basically because inflation is out of control, and therefore, you know, teachers' disposable income is decreased, and therefore they want pay rises. So it's really interesting how the world is sort of interlinked.
Councillor Scott, you had a question?
Yeah, I was just more interested in the general liquidity issue that they would have had with the Silicon Valley Bank to cause that. Obviously, they can't meet their own obligations, which they've put forward on, and banks, you know, banks live on deposits and lending. So what is the fundamental thing that's affected that? Is it obvious?
Oh, look, I'm a Treasury guy. I find the whole subject fascinating. So basically it's that, oh no, how long we got? Anyway, there was a classic situation where they borrowed short and invested long. So it was a situation over COVID where pretty much they got a lot of deposits in from their clients, retail clients and technology venture type companies that basically put a lot of money on short-term deposit with this bank. At that point, that bank didn't actually lend that money out. There wasn't actually the demand for it to be lent. So they actually, and their balance sheet over that period grew, I think from, I might have the numbers wrong, but the magnitude is basically right from 60 billion to $200 billion. You know, we're talking big chunks of money. So what they did with all that money, they put that into 10-year treasuries, 10-year US treasuries, which in theory is a really safe investment. It is, unless interest rates go up and you need to liquidate those investments really quickly. So that's what happened. So basically the situation where their investments, the value of investments fell significantly. When they did sell those investments, that generated a loss of around about $1.9 billion US. They went to the market to raise equity or capital to cover that. It didn't happen. And then one of the new things we've got going on in terms of the banking community now is how rapidly social media can actually lead to the fear of things and the real things happening quickly. Like these days now, it's not a case of having to line up the bank and get your money back. You know, people just sign on in line, basically withdraw their funds. So a lot of these, particularly these technology firms, basically withdrew their cash, led to a cash run. Here we are.
Just like Meatloaf said, you took the words right out of my mouth, and that's what the our chair did, particularly around general liquidity. But there was an interesting discussion this morning we had around insurance, and I note that with the Silicon Valley Bank, there was only a certain amount of cover that bank actually, that those that lost money could actually claim through their insurance companies.
Sorry, are you talking about deposit insurance? Is that what you're talking about? Right. Yeah, first time I'm a rookie. There is a bill before Parliament where they're proposing that all retail deposits would be guaranteed up to $100,000. So that's a really interesting situation where that would probably lead to people putting their deposits amongst a whole lot of banks just to make sure that in total they were covered from an insurance point of view. Now, that insurance will be funded by a levy against all other depositors, that sort of thing. So again, like anything in life, there's no such thing as a free lunch. In terms of the US, they have a policy over there where the first 250,000, which I think you alluded to, 250,000 US is covered. But what has actually happened, and you've got to give a lot of respect to the US regulators in this situation here. In the space of probably 48 hours, they stepped up to the plate and said every depositor would get their money back. So it's basically guaranteed. So I think what you're asking, what does that mean for maybe yourself or for ECAN in terms of its exposure to bank risk? Okay, for ECAN, so yeah, so I think I'd like to think New Zealand is a very different beast. The banks here are, I think, well, if you compare it to the situation at Silicon Valley Bank, it's run completely different. Credit ratings are completely different. They have to hold more capital. And probably, and I'm not saying this officially, if push came to shove and something turned to custard for the banks, probably the government would step in, because it would fit in the too big to fail types of situation.
Okay, so what you're saying then, and that probably is the basis of my question, is that you kind of got a 250,000 US dollar cover, for your bank deposit, and yet the government will step in and it will cover the rest of it. Is that right? So you've really got 100% insurance policy in some ways.
Well, up to that point where, as at the end of last week, the individual depositors thought they were only guaranteed up to that first 250,000 because that was the regulations at that point in time. Subsequent to that, they've stepped in and said all the deposits will be guaranteed. Now for Treasury geeks like me, I find this quite fascinating because it falls into something called moral hazard. So should we be guaranteeing people that basically put money into banks that carry a lot higher risk than other banks? If for example, banks are always going to be bailed out by the government, what's the disincentive for them to take these risks and get the bonuses and the extra returns? But again, that's a conversation for Treasury type guys.
Because when we look at the failures of banks, so first one in the USA and then the other one in Switzerland.
Hopefully Credit Suisse is not a failure. It's a work in progress. Yeah. Oh, does it scare me? Remember that FUD phrase I just used? Fear, uncertainty, doubt. It happens every now and again. And I reckon, to be honest, I think it's just going to be one of those things we're going to, and in 3 months' time, it'll be yesterday's news. Would be my guess. Yes.
Thank you. Councillor Mackenzie.
Just reflecting on your comments about the underlying reasons for inflation, wage inflation in New Zealand. Right. There's an interesting article in the latest Economist talking about that on an international scale. So New Zealand is facing those issues, but we've got a government here that appears to be working in a contradictory direction to the Reserve Bank. Reserve Bank's trying to control inflation. Central government still seems to be inflating it with minimum wage rises and various other things. Do you think that in the balance of those things, and it's only an opinion because we won't know until the Reserve Bank does react, whether that will actually encourage the Reserve Bank governor here to continue to perhaps ignore deflationary signals that might be coming from overseas and to try to combat the domestic issues?
You're trying to draw me into a political conversation, are you?
No, more as an objective observer as to which way you think it might jump.
I think probably that name of that party probably says a lot about their priorities in life, really. So that's a little bit, yeah. But I think you're right. Look, I did see this problem coming. Like there's a situation where election year, teachers, nurses, quite rightly, people will be wanting extra cash. But I think what we have seen, which I think is really encouraging, there has been some changes to the immigration settings. The issue there, though, is that all countries are facing the issues that New Zealand is facing. So I think we kind of took the immigration, again, personal comment. I think in terms of the immigration, I think we kind of just assumed it was a tap that we could turn off and on. And I think it might be a bit trickier this time. I hope that answered your question. Oh, so in terms of, oh, well, sorry.
When it's your own personal opinion, and that's not from a political perspective, but from a objective perspective, which way you think the Reserve Bank government might jump in terms of thinking about the things that have changed this week from last week, whether the domestic pressures will actually override the international events, I guess.
Well, do I really want to know what's going through Adrian Orr's mind? I don't know. That could be concerning, but I think I think I understand your question, which is basically how does the continued tightness in the labour market and things like minimum wage increases? Yes, obviously it makes the job a lot more difficult for the Reserve Bank. And if you look at the Reserve Bank's policies that have statements that have come out in the last 3 months, those comments you're talking about are front of mind. So it's labour costs, which are really significant. And again, things like, got to be careful what I say, but in terms of things like minimum wages as well, when they look at the inflationary impact of that, it's not just the initial impact, but it's basically it's all the relativities that it flows through to as well. So it's very hard to quantify that, but I think it is significant. And obviously that's why companies are still having to pass on cost increases, because what I think the really interesting thing is like things like a lot of the things we import now are cheaper now than what they were a year ago. Oil prices, shipping costs have come down significantly. Wood, a lot of imported products that have actually have come down significantly, but inflation has moved on to causes from within the domestic economy rather than what was instigated in terms of the initial shock, which is the Ukraine, which was the food and oil prices. So the inflationary pressures have moved. Yeah, exactly. Yeah, exactly. Thank you. Yeah.
Thanks, David. Just one question I have related to our borrowing. You comment that the cost of our funds or funds for us are lower than many of this page 32. Many of our peers in local government. Is that still current situation, or depending on what happens in the next couple of weeks, of course? But
oh, definitely. Yeah, I think when we did the maths, when I looked at it before I came today, I think your cost of funds, including your margin, was 3.7%. So, look, that's a very good number, and that compares. Well, to be honest, it probably compares better now than what it was to a lot of other councils, because what's actually happened, a lot of councils are continuing to borrow. And obviously, as you do new borrowings at the new higher rates, that pulls up your average quite quickly. So whereas you guys have been reasonably stable, and in fact, debt has reduced by 5 million in the last few months. So no, and answer your question, you're in good shape.
Thank you very much. No further questions, so I'll put the motion. Or John, do you have another question?
No, I just wasn't sure what David had in his PowerPoint. That was all, or is the general conversation covered off pretty much where we were? And I did, and in the past, I think in those documents we've had statements of covenant compliance on our borrowings and the like, and just wonder if that's something that was missing this time round.
Probably this is the point where I wish my colleague was here, but to cover that off. But look, if it's not there, it will be remedied. There'll be obviously no issues. Okay, so yeah, as I said, in terms of the bigger picture, you're in the day, like a AA+ rating. This says it all really.
Are we still?
Things have moved on.
Thanks very much. Okay, we'll put the motion. And the recommendation, which is on page 21, that the Audit, Finance and Risk Committee receives the report from Bancorp Treasury Services to the 31st of December 2022. I have a mover? Councillor Karakia, Councillor Sunkel second. All those in favour, please say aye. Thank you very much. Thank you. Thank you very much, David. If I could now invite Yvonne and Brian, you can stay put. Thank you. We're now going to have a small update on our audit report, end of June 2022, from Audit New Zealand's Yvonne Young. And Yvonne, if you could just maybe go through.
Thank you, Chair. Kia kato. Thank you for having me here to present our report to the Council for the audit for the last financial year, the June 2022. I take the report as a read, but just to give everyone a quick summary here, the report has two aspects. First, we have included our comments and findings on the key audit risk areas. In the section 3 of the report, we concluded all these areas were accounted appropriately based on our reporting materiality, which we have already discussed in the December Audit Finance Risk Committee meeting and the Council meetings. And then there are 5 recommendations that we have raised for management consideration. None of them are high risk recommendation. We will follow up the status of these recommendations during our interim visit for the upcoming audit for June 2023. Yeah, that's me, but I'm happy to answer any questions from the committee.
Thanks, Yvonne. Councillors have any questions? Councillor Scott.
I think just a general question really regarding process. Is Audit New Zealand back on track in terms of getting audits on time?
We are keen. So at this stage, obviously we still have a backlog at the moment to deal with, but we have already started to schedule all the council's audit, which are our top priority for the upcoming year. So as I said, we at the moment we actually have already scheduled an interim visit in June, and the final visit, I can't remember the exact date, but it's around September and October to be able to meet the October statute deadline, which has already brought back from the Parliament. So yes, that's the plan. But I will certainly give the committee an update in May or June just to confirm our position.
Councillor Karakia.
Kia ora. So obviously, just picking up from that question, there has been an issue with timing and delivery. Is that right?
There was, yeah, that's a true statement. There has been, can't really count the years, maybe 3 years, that since the COVID started. So we have been having quite long sort of backlog to deal with. That's why all the council's statute deadline was delayed to December for 2 years. So if you recall, you may have the annual report only adopted in December for the past 2 years, the June 2022 and 2021. But for the upcoming 2023 financial year, the statute deadline has been brought to the normal track.
So I was trying to get my head around that as a new councillor. But whose end is it? Is it Audit New Zealand, or is it our internal systems here at ECAN, or is it a combination of that?
No, it was us. So the timeline issue, it was really on our side, our staff shortage, and that was since COVID, the lockdown. But I think it's everyone's sort of the issue in terms of for all the service provider, all their service provider have the same issue. That's why Parliament decided to extend the statute deadline. It's not about ECAN's process or whatsoever.
That's cool, because that's what I wanted to know. So the next one though, so it's your internal, it's, I mean, always, I mean, if I can use this phrase, the get out of jail card is always around the lockdown, the COVID and all of that and the ongoing issues. But surely for now that we're out of that in some ways, you've identified the problem, Audit New Zealand. And so you can't actually guarantee yourself that there's going to be better timelines for your delivery. Is that what we're hearing here?
At this stage, I think, yeah, I can't guarantee at this stage, but as I said, in the May and June, I will be able to confirm the position. But I've already indicated we have scheduled the audit back on track already, but just we are still dealing with backlog at this stage. We are just hoping we clear out before May and June, then we can get on to all the council audits.
Thank you. But there's a difference in actually scheduling and actually delivering. So I'll be really interested and watch this space around delivery, timely delivery. Good.
Thank you. Thank you, Yvonne. I've just a couple of things from me, just to say that our independent advisors couldn't be here today, but they provided a list of questions on the agenda, including Audit New Zealand's comments. But I think what we'll do, generally that they've been answered by Giles, but any unanswered ones we can pick up with you. I understand maybe May we can get together to just check on things, where things are at. And I note in section 4, for example, you've given some good pointers as to what we might need to improve in our internal controls. And I think that they've been noted, and staff will continue to sort of work on those. What's my understanding? Is there any other, Brian, is there any comments that you'd like to make? No, nothing. I think really just going forward, more conversations with you to resolve things, and so we get a bit of a streamlined, and any issues are picked up as early as we can so that we can address them.
Yeah, sure. There you go.
I was just going to say, obviously I'd like to thank Audit New Zealand and their team, but Yvonne has a standing invite to attend this committee. And I know she's keen to attend when she's able, but obviously she has other commitments.
Councillor Sunkel.
Thank you. This isn't for an answer now. There's the occasional conversation about the relationship between external audit and internal audit, and how those kind of things interlace or mesh, or what is seen. So not for an answer, but that may be a question that's asked down the track in a conversation of understanding the different responsibilities.
We're in discussion with the Auditor General's Office to run a workshop with the whole of Council on the role of external audit, and obviously we would certainly like Yvonne to attend as part of that, to provide Audit New Zealand's part in that, so that there is greater clarity and understanding around the table.
I think if there's no further questions, I'll put the motion. Recommendations on page 36 of the agenda. And the motion, the recommendation is that Audit New Zealand, for the Audit New Zealand Management Report year ending 30th of June 2022, that the Audit, Finance and Risk Committee, 1, receives the Audit New Zealand report to Council on the annual report for your year ended 30th of June 2022, and 2, notes the recommendations and management responses, which will be monitored as part of the committee's outstanding actions. Over mover. Councillor Sunkel, seconder. Councillor Southworth, All those in favour, please say aye. Aye. Carried. Thanks, Yvonne, for coming. Thanks, Brian. You may leave the table.
Just a question, is it worth noting the potential for that workshop of understanding in the minutes, or just let it slide in?
Current provisional date is in May, but we're just trying to finalise with audit. The 4th, Star Wars Day.
Thank you. I think it's just useful to note it that there's a piece of work that's coming to us into the future.
Thanks, John. So we're noting that, and we'll inform the independent advisors that that's on as well, and Yvonne, of course. So we'll move on to, I'm not sure, Yvonne's just leaving, so thank you very much. Item 8.4, internal audit plan. And I invite Stefan to come to the table. Thank you. And this report's just providing the committee with proposed update to the internal audit program.
Thank you. Thank you, Chair, and good afternoon to everyone. It's my opportunity just to present our draft audit plan to us for your consideration and ultimate approval. Just in terms of how we got to this audit plan, so we have engaged with both LT members, our AFRC committee members, as well as our independents, sort of to gauge in terms of what they see as the risk currently. And that was the approach taken as our current risk framework is a work in progress. And in terms of this, and we just sort of highlighted some of the key things that we've seen in this paper around the upcoming audits that we've already had approved in prior years. So that would be the capital expenditure and asset management review. And then we've also included the Te Tiriti o Waitangi audit that would be scoped in July of this year. And that's one of the big ones we have seen coming through from the councillors as well as ELT in looking at that in a more robust way from a year-can perspective. And then, yeah, just another thing I want to note is around the F17A review. So again, for your consideration, I take it that has been read, and yeah, would recommend that we have our current processes internally that is addressing that, and we haven't put that as a specific review on our side. So is there any questions from the councillors?
Councillors, any questions? Councillor Southworth?
On the table, the outcomes of engagement on proposed internal audit plans, the very bottom it says biodiversity fund management, and I wondered whether is that like biodiversity as in the whole portfolio, or is it specifically around funding that we give out, like through CWMS or through contestable fund, or more that interacting directly with the public? And yeah, so what did that mean specifically?
Thanks for the question. Yeah, so effectively that would be around the larger process that we are following and the management of those funds. So in terms of detailed scoping, that's something we'll start doing as we get closer to that, and then we'll definitely raise that again, and then we can see what the detailed scope would be around that.
Just to clarify, I think, Stefan, that was one out that's not included in the current proposed plan, but clearly we do update this program on a regular basis.
That's it.
No, that's to be determined. So we obviously have tried to balance the overall views of ELT and the audit committee members, plus our professional views from John, Stefan and myself, and obviously speaking to PwC, and the resources that we have available as an organisation. So whilst that was commented on and raised by, I think, one member of ELT, we haven't currently included it in the programme, but clearly it's something that can be raised at future iterations. This has to be a live programme, just as the Bancorp presentation has to be live. Maybe we're not quite that responsive, but.
Southworth?
Yeah, to follow on from that, I mean, I understand that we've all sort of contributed independently into this, and then you collated the table, if I'm understanding how this has worked. And I just wonder whether there's also, I mean, are you intending to do some, you know, because somebody can say something independently, you don't hear it, and then when you see it, you go, oh, actually, that's a really good suggestion. And so, you know, but it doesn't feel like there's been a process here where there's been here's all the things that have gone in the pot and how do we, is that?
So that's the purpose of this conversation. So we've collated, we're suggesting a program based on our current resources and what we've already got in the plan. If the audit committee wishes to change the program, include or replace a proposed audit, then clearly that is within the remit of this committee to do so. But as I say, one of the things is, part of this is you will see what other people have talked about, and we will update the program in 3, 6, 9, 12 months time. I can't remember our exact cycle, when there's another opportunity to go, what are we going to do in the next? So unless we've started scoping it or until we start the work, none of it's locked in. If something happened, we would divert our resources to that, and that would impact on the plan. It's a plan.
Yeah. So on that point, like just a single line saying biodiversity fund management, it doesn't really give me a clear picture of what it is that's been, you know, flagged as a concern by the person that raised it, and it could be very legitimate, as the same with some of the others. I just wonder if you just actually need a little bit more detail about what the concern was that flagged it as something to go into this table to enable us to actually properly engage in this, rather than, you know, that's all the information we have, and then this committee might or might not change that or have a difference of opinion. So yeah.
No, I mean, we can definitely provide more detail on some of these, especially the ones that you feel that you are a bit unsure about, and then we'll just distribute that to the committee members once we've got the details. Yep.
The recommendation on page 67. Internal audit plan, and recommendation is that the Audit, Finance and Risk Committee, 1, approves the internal audit program, and 2, agrees on the approach for the review of external audit, section 17A reviews, and the review of flow of information between council and officers. Do I have a mover for that? Councillor McKenzie, Councillor Sunkel second. Any discussion on that? I just wanted to say I think it's a great piece of work. It's outlining a whole raft of stuff that and reviews that we need to address, and in particular with reference to page 68 there, that the work is being done through the THPIO, which is going to come over time. It's going to improve things immensely in terms of assessing our work. Charles.
So, I mean, I'd like to obviously thank the committee for their engagement in the conversations. It was extremely useful, but I just wanted to draw the committee's attention to, on page 70, the continuous monitoring. It's something that John, before he left, myself and Stefan are really keen to begin to introduce. That's in effect of ongoing continuous auditing, if you like, where we would use analytical tools to review ongoing transactions. We are some way away from being able to implement that, but I wanted to give some visibility to the committee that it's our intention that rather than relying on a review once every 3 years, we're actually able to pick out certain transactions or certain interrogations that would give us early identification of where controls were potentially not working as intended. And it certainly would be a big step forward in terms of our ability to provide assurance to the committee.
Thanks, Giles. No further discussion. Oh, John, sorry.
Just again to say thanks to the team. It was a really good conversation, and I can't actually remember what I said, but I know walking away at the time, it was great to have the conversation about where we want to be. And I'm being marginally facetious, but it's, I think, really useful, those smaller groups of just sitting down, having a one-on-one type conversation or two-on-two. Really useful.
Great, thank you. The motion has been put. All those in favour, please say aye. Aye, carried. Thank you. We'll now move to item 8.5. which is an insurance update. Brian, if you could come to the table, thank you.
Yes, this paper is really just a general summary of our insurance position currently, and just to point out the small number of areas where we don't currently have cover. Beyond that, worth noting is, of course, some questions have been asked about our public liability insurance cover, which, as you can see from the paper, is quite substantial at $300 million. Fundamentally, we are actually part of a massive risk pool for public entities in that space, and that is done through our brokers for public liability, Marsh, and they have advised us that we are benchmarked well against most other public entities. And a lot of the structure of that deal is actually fixed by the Australian managers of the risk pool. So that's that has also been in prior years some discussion about the issue of flood protection insurance and forestry assets. In the past, it has been considered that it was uneconomic to insure those items. We're currently beginning a piece of work with our brokers, Crombie Lockwood, for that type of asset insurance, just to test the market again. Their response so far has been the market is difficult, to say the least, after a cyclone and various other things. However, there may be some basis on which we could do some value cover there, which we will explore with the next couple of months and prior to us renewing or starting a new policy in the new year. So any questions on that, I suppose?
I have a couple of questions just really on behalf of the independent questions that we got back, or queries. The motor vehicle insurance, where there is an excess of $5,000, the question was, do we have any vehicles that are less value than that? And if so, should they be on third-party insurance?
So we buy our vehicles using the all of government contract, which gives us a substantial discount, which means that actually we lose very little money when we actually come to sell them. So all our vehicles are worth substantially more than the $5,000 when we sell them.
Yeah. Councillor Crook.
Just a point of clarification. I'm sorry, Giles, I didn't quite hear.
We take advantage of the all of government contract, which has syndicated agreements with providers who provide, most of them provide a substantial discount to government clients because of the volume. So we actually buy vehicles substantially less than list price. So at the end of the life that we want to use them for, which is usually from memory 4 or 5 years, we then sell them and we actually don't lose a huge amount of money when they come to be sold compared to the list price that they would have been. Well, the vehicles are worth significantly more than the excess.
Just one other query on behalf of the independents. There was a query about our insurance level for marine insurance. Obviously, there's a reference there to the asset schedule, and we're confident that there's sufficient insurance for our marine activity.
Yes, most of the asset-related insurance, of which the marine insurance is one, are related to specific items that we hold, and the brokers go through the list of assets that we hold and check the valuations, etc. So yes, we're pretty confident they're looking good.
Sophie?
So it's a question that around the excesses. So, and I note that one of the at least one of the independents had put this in their notes as well. But so for public liability, and I think it's probably relevant also for professional indemnity, we have what seem like really quite low excesses. Now, I don't know if this type of insurance, it sounds like it's one that's some sort of pool of public, so it might not work the same, but I know when I play around like with house contents, you put your excesses up, the policy value cost comes down. And so you're sort of looking for somewhere where, and so the sort of likelihood, frequency of having to claim, et cetera, plays into your decision making. And so those excesses seem very low. But is there a reason for that? Does it make not much difference if we put them up?
Fundamentally, we are party to someone else's great big contract, essentially. So we don't determine the terms of the contract, but we have been advised by Crombie Lockwood, who are our main brokers, that we would be crazy to get out of that deal because it's a great deal. So we have continued to roll that over from year to year at this point. Yeah.
So essentially that is, we're just offered a package and that is what comes with that policy and there's no option to play around, is what you're saying. Yeah. Cool. Thanks.
Thank you, Councillor McKenzie, and then Councillor Karakia.
Just going back to your questions to Crombie Lockwood about insuring against flood damage or insuring our assets against catastrophic events. That's a discussion that's once every 2 years is held with the river liaison committees, informally but not formally. And so I guess my question is, and so they have opinions on that. And I think my impression of that discussion is, in general, they're happy with managing that risk within their own finances rather than the external insurance. When you come back with some more definitive advice from Crombie Lockwood, will that be discussed with the river liaison committees, or do you anticipate that this organisation would make an overarching decision around that sort of stuff? Should the recommendation be that we should have carry insurance for that?
Well, I guess it will depend upon the results. In the past, the premiums required have been quite high. And if this just confirms that, then there's probably no real discussion to be had. But if there is a deal which can be done, then that would certainly be discussed with the Rivers people in the sense of, is this an approach we should take? But bearing in mind, I think the thinking around it is more considering cyclones and floods and all those things that have happened in the last few months. People are just asking the question, is there a way to deal with this so that we don't take a $20 million hit every year, if that's the kind of timing we're starting to move to in terms of these events? So, I mean, there is a huge balancing act here, and it may well be that we just confirm, no, we're not going to do it.
Cheers, Scott.
Question, Brian, is pretty simplistic, really. The insurance policy around that river, it's about equipment rather than, it's not to do with stoppings. It's about river gauging, hydrology equipment, those sorts of things.
No, we're actually talking to them about the whole stock bank structure and everything. Yes, well, exactly right. Yes, it will be a challenge.
Mr. Karakia.
Kia ora. Kia ora, Brian. You've got with staff insurances. So you've got life insurance and then income protection insurance. Is that pretty standard across local government, or are we actually giving, including more in the package?
It's a feature which you see in a lot of public sector organisations trying to build our employment brand, and essentially that's the purpose of it to some extent. It's part of people's, to some extent, remuneration package. I'm probably not the perfect sort of person to ask about it. It's more maybe a people and culture question, but yes, essentially it's trying to build our employment brand.
So is that man there? Yeah, I just my just a bit of context here. It would be really interesting to see because I know within the market, we're kind of, it's very, very competitive, and if there was we'd have to obviously explore this if there's an opportunity, but to look at sort of possibly, I don't know, a couple of other kind of insurances that could actually enhance our staff product, our staff package, because I just think that with this, if that's just standard, that's what every local government organisation gives.
So my experience in central government is that they don't tend to offer that. But I think you're right, it is part of our overall employee value proposition. And what we need to do and what we are increasingly doing is making sure that staff understand the total package that they get. They don't just get pay, they get flexibility, they get great work to do, they get income protection, life insurance, some discounts that are on offer. So trying to build that picture of it's not just all about your salary.
Thank you. Uncle?
Just wonder if through COVID and our extended leave and a whole bunch of things that in my mind wrap into previous conversations we've had. I just wonder if you might comment, Stephanie, or.
Thank you, Councillor. You know, we've tried to do a number of things for staff to realize that while remuneration is important, it is not the only way that they are supported, given that we do compete with market rates. And in that context, one of the things that I've pointed to is that in a number of private companies, particularly in the first 6 months of COVID, there were significant job losses in the private industry. There were no job losses at Environment Canterbury due to COVID during the entire period of COVID. And indeed, during that period, we provided significant leave ability for those staff and support of their families. And if I could just comment on the benefits with regard to these insurances, I can attest to the fact that we've had at least 2 staff, unfortunately, pass away for natural causes, but they were in circumstances where their families didn't have the support that they needed. And the life insurance that this organization provided through this made a significant difference to their young children or to the debt that they left behind for their elders who then had funding to pay that off. I won't share the detail further than that, but I can say that this ends up being quite important in the event. Like many insurances, people take them for granted until they're actually needed. Thank you, John.
Thank you. If there are no further questions, Brian, you can leave the table. Thank you. I'll put the motion. Recommendation on page 72 that the Audit, Finance and Risk Committee 1 notes the council insurances held and the key uninsured risks. Do I have a mover? Councillor Suncool, seconder. Councillor Robinson. All those in favour, please say aye. Carried. We'll now move on to item 8.6, the policy status update. And Stefan, if you could join us again, thank you.
Thank you, Chair. Yes, this is effectively just a paper to present our current status in terms of our policy framework. So we've got both our status in terms of our council policies and then our corporate policies. So I take it that this paper has been read and I'm happy to answer any questions.
Cheers, Scott.
Thank you. Thank you for this. It's really good. Just mine's about dangerous dams policy. Not so much about the policy itself, but it's combined. The notes say under review and to be rolled out with incoming dam safety regulations. Where are we with those? Do you know where the dam safety regulations are? I know that there was a piece of work done where we're working for Southland and Otago for the South Island, and is that combined piece of work that needs to be done? It seems to be. It's been in transition for quite a while. Is there any easy answer for that? If not, don't worry about it. Don't worry about it.
I think notice that David's left the room. I'm not sure that he would have known. We will come back to you. I think we'll come back to you, Peter.
Any other questions? Councillor Southwood.
Yeah, it's just sorry. I know we are with this table we're looking at, isn't it? Yes, it is. Yeah. So it's just two questions really. One is that there's a few additional due for review dates coming up, and I'm just wondering, and there's already quite a lot on review already. So I'm just wondering, are we gonna be able to cope with those extras as well that have got, like June, September and August dates for review? And then secondly, I'm just curious to know what's the difference with a guideline? Like, what does being converted to a guideline mean in real terms? What's the difference?
Thanks. Yeah, so just on your first question, so currently what you'll see is in terms of the overdue policies, they are spread across a wide field of sections. So I do not foresee any real significant challenges or any additional pressure on the team to actually develop those. And ultimately, we have now developed a new framework that we are rolling out to make this a bit of an easier process ultimately. And we have also, as the risk and assurance team, tried to be a bit more closely aligned to the team to support them in getting this across the line. So from that perspective, we should be fine. And I don't expect too much, yeah, in terms of resourcing challenges. And we are definitely trying to be more proactive. So we all starting to work on these already, trying to get them updated. And then in terms of the second question, so if you can just repeat that second question again.
So in the status, there's several that say they're to be converted to a guideline document. So I'm just wondering, what does that actually mean? Like, what's the difference?
Yeah, so effectively what that means is, from a policy perspective, that's a non-negotiable. Every employee or whoever is actually mentioned in that policy needs to comply by those requirements. Where a guideline is more sort of an advisory in terms of the best approach that we can take. So if somebody does not follow that and there's a valid reason for that, it's appropriate, and we do not concede as a disciplinary action that needs to be taken something to that extent. It's more there to guide our staff in terms of the best approach to take.
Entry to that, does that make it more complicated to actually track sort of compliant, or that's moving into there's a bit of flexibility in there, which is more complicated when you're then reviewing and auditing down the line. If you've got a policy, it's like, yes, it complies, no, it doesn't. It's this, and it's all on various ifs and buts. So I guess the question then would be, yeah, have how have you decided that a guideline is why have you decided a guideline is better for the particular ones you have? And then presumably there are others where you're saying, no, this is definitely a policy situation, and where it's going to a guideline. Does that mean presumably we still would review those every so often still?
Yeah, so sorry about that. Effectively the good thing about a guideline is there's less process in terms of updating guidelines. So any more prescriptive sort of requirements being set would be included in a guideline, and we are more flexible in updating those in a timely manner as the organization changes or things changes in terms of process. But in terms of the policy, it's very important, and that's something we have been working with in terms of our new framework, is making definite or determining definite non-negotiables that need to be in those policies. And if you are not complying with the guideline and you have obtained appropriate approvals, it's not ideal, but it's still fine. But if we are not including the requirement for an approval in our policies, that means we ultimately have that gray area. And that's something we are definitely trying to avoid by making it more precise and more concise as well in terms of the policies. And the guidelines are just there to assist staff.
I was trying to ascertain also the difference between a policy and a guideline. You've kind of articulated that fairly well. I'm just thinking that, though, what this looks like optics-wise is that they're all overdue, so you can't come to a conclusion, so you're going to call it a guideline. That's what I would look at looking at this. So just what you've covered, can you come back from a guideline? Can you come back the other way, go guideline back to policy?
Sorry, can you rephrase that question?
What you've done. Now you've transformed it. So for me, because you couldn't actually come to a consensus on how to possibly do the policy, so just put it over here, we'll call it a guideline, and we'll sort of take advice and we'll make it a little bit easier, but it's not binding. But if you had more time on it, you know, maybe going through the guideline part period, and then you thought, oh, okay, yeah, we get that now. Should we actually now make it a policy? All I'm asking is, can you go back the other way? You've gone policy guideline. Can you go guideline back to policy?
You can definitely go the other way. So just a bit of context to add what to Stefan has said, and also for the committee. Last year I asked PwC to do a review of our policy framework to understand exactly where we were, what policies we had, which ones were overdue. So the due for review date is when you have authorised a policy, there is a date which says this policy must be reviewed by. What we found, for example, because I'll pick one that I know has now been reviewed, is our internal policy review, our privacy review, should have been reviewed by the 1st of December 2018, 5 years ago. There's since been changes to the privacy legislation, and we've now done the review of the policy. This framework is designed to be really clear about who the policy owner is, and you'll notice that in most instances that is me, with one exception, I think, and who the policy monitor is. Policy monitor is the senior manager who's actually responsible for ensuring that that policy is updated and reviewed by that date, but more importantly, is communicated to staff, and that we have a process for providing assurance that people have complied with it. And so we've just literally finalised, and Stephanie has approved the new fraud policy, and we've just launched some new fraud training material, which Brian is monitoring compliance of completion to make sure that staff have completed that training. The question then is, how frequently does that training need to be done? So this is a reflection of going, at a point in time, where were we in comparison with the policies that we already had in place? We've then also looked at it and gone, are these the right policies for the organisation of our size and scale in the environment that we now work in? And we've used our own professional experience, but also looked at other organisations and good practice about what is appropriate to have a policy, recognising that the more policies you have, there is a bureaucratic and process overhead to that, and that's not to say that you shouldn't have them. But also, where do you want flexibility? And a good example is the flexible working arrangements, which previously was a policy. So it was very prescriptive on, this is the flexibility that we allow our staff to have in terms of working in the office, reducing their hours when they need to. And that's set in stone, in effect. We've now moved to a guideline, recognising that the world has moved, and there is a greater requirement for us to recognise the balance between working at home, people's responsibilities for outside care, the need to come into the office to create that culture and connection at work. And so that's not appropriate in our view to have as a strict policy. It's much more appropriate to recognise the nuancing that's required. That depends on the type of work somebody does, the type of individual somebody does, the part of the organisation they work in. That's why you move something to a guideline, for example. So it's a balanced judgment, but recognising that we're trying to go, what are the critical policies for us to have, and make sure that we, A, keep them up to date, B, communicate them and train staff in them so that they are aware of them, C, monitor that people are aware of them, and then D, monitor compliance with them as appropriate and provide assurance back to this group.
It's just that on a audit and risk and compliance committee, you know, you've got to think of you've got to play the devil's advocate. So if something happens and then suddenly, what's the policy? Oh, we haven't got a policy, actually, we've got a guideline. And then how is it then binding, you know, which goes back to what Vicky's original question was.
Councillor Sunkel.
Thank you. I do have a slightly different view to you, Councillor Karakia, in that policies, in a sense, can be very binary. And yes, they're absolute. But in my mind, a guideline, if well written, has the policies contained within it and reaches a point where within that matrix a question is asked that then allows to step out or over or through in a more permissive manner than maybe having a binary policy where people just close their eyes and walk through because I guess the challenge of the bureaucracy or the questioning is too difficult to make an arbitrary decision. So I am for the more permissive guideline system, as long as it's written in a space where we do have those bottom lines where the checkbox says we will then ask the question and seek the permissions to work forward, which leaves us with an agility to actually move, as Giles has pointed out.
Okay, thanks. Just trying to keep us out of jail.
There being no further questions, then Stefan, if you could leave the table, thank you, and I'll put the motion. And the motion on page 76, that the Audit, Finance and Risk Committee notes the status of corporate and council policies. Is there any further discussion? I just want to say that I really think that this approach of having policy and guidelines is a good thing in this day and age, where and especially the items that are potentially going to be converted to guidelines relate to people, and we have a huge diversity of people, huge diversity of implications, and there's a little bit of flexibility. So I tend to agree with Councillor Sunkel that I think it is good, and as long as there's some definition about what might happen within those, I think that will be fine. And if there ends up being problems, then we can review it. The other thing I was going to say is that there are a number over the page there of policy documents that the period for delivery is just undefined in terms of the review period. I don't see an issue of that. I think this is an exciting piece of work. It's summarising a whole lot of policies that are either being worked on, being updated, or under review. And I think it's a really good that we're heading in the right direction. Giles.
So thank you, Chair. Just that second page 79 of 116, those are the council policies. Those are the ones that council formally approves. Predominantly, there is an opportunity to review them, in an election cycle / LTP cycle. What I think Catherine and myself have discussed is putting in a review cycle in them. I think what we need to do is to make that review cycle appropriate given the cycle of the triennium, i.e. it would not be appropriate to expect a brand new council to consider a particular policy in its first 2 or 3 months when the new councillors may not have appropriate experience. So, but recognising that they do need to be reviewed on a periodic basis.
Thank you. I was also going to say that I think it's really good the direction that staff are taking in terms of issuing these policies and undertaking training and awareness programs with the staff across the board, and then following up with the monitoring process, which should really part of our across the organisational view of things. It should help just so that people understand where they fit and where things fit within the organisation. I have I've put the motion. Could I have a mover and seconder, please? Councillor Sunkel moved. Councillor Southworth second. All those in favour, please say aye. Aye. Carried. Thank you very much. Now I'll move on to item 8.7. The monthly financials. Brian, thank you very much.
Right, I guess the headline point from the monthly report is that the organisation continues to be running in an operating surplus well above our budgeted level at this point. This is for a number of reasons that we've largely been traversing for the last few months in terms of delays due to recruitment, some change of focus and government interventions in the public transport area, etc., driver shortages, etc., which has meant that basically the organisation hasn't been able to generate the workload that had expected, particularly even at the last 6+6 forecast period. I think it would be fair to say that given the head of steam we seem to be building up there, that where we forecast the 6+6 that we would be well off our budgeted surplus level, we're starting to creep back towards the notion that we will be close to or on budget at this point in the year. Other things that I would note is that there's a significant underspend projected in the CapEx area. This is for well-known reasons in terms of the Kainga depot, etc. But as we've noted before, that we're doing some work in the area of a multi-year capital and asset plan, which will in future periods be able to inform our budgets in a much more accurate way, which should close out some of that gap in future years. I also note the new format to the report, intended primarily to give a view of the risks to the current position in each of the portfolios, all of which are quite different to each other, interestingly enough, but just to give the committee a flavour of what the future might look like potentially as we move through the year. Also, we completed the 6+6 forecast at the end of January and expected a lower surplus still. It had improved substantially on when we did our last forecast in October, which was the 3+9, but we're still suffering the hangover effects from the consenting backlogs. As I say, though, as we progress further through this period in the year, it looks like we're going to start to close that gap. So it seems to be upside at this point. And a couple of questions were raised earlier in the day about the coastal plan on page 81. And I understand that the delays in that area were because the initial Runanga consultation was running a bit behind, and that had knock-on effects to other activities throughout that program. So it has placed the overall program slightly behind schedule at this point. And a question on page 82 about the reallocation of resources, and that really, I understand, refers to the movement of rivers, engineers, etc., onto flood recovery as opposed to catchment maintenance. So obviously something that we're all more than happy to see happen. Happy to take questions.
Councillor Southwood.
A couple, both on public transport. So my first question is on page 81, on the paragraph under air quality and transport, just under the second table. It talks about having being more favourable to the budget and identifying that to do with underspending the national ticketing system. But I'm just wondering, because I also understand, like, I think we're collecting rates for the flat fare trial at the moment, but that's been paused because of the 50% reduction that the government has given us for. So how is that? That presumably is also captured within that, or not? And to what extent is that?
Yes, overall, these comments are very high level. So yes, that is encapsulated in there in those terms. You're quite correct. We are collecting that, and we're not actually doing it because of the 50% government. And that's kind of goes to the comment about government intervention. The landscape is changing. I mean, in terms of the forecast we did at 6+6, our statement is now that public transport's forecast is completely out of date and doesn't make any sense because these items have changed so much in the last few weeks. So you're correct.
The second question on the page 82, under budget risk number 3, and it talks about the Community Connect concession. It's 100% funded by government, but has significant reputational risk. And I'm just wondering, what is that risk? What is the reputational risk? So then we can maybe think about how we manage that. Like, I don't actually know I can't think why, if government's funding something that seems on the face of it to be really good, then what's the reputational risk? Yeah, and then I'll just make a comment after that.
Yeah, I was just going to throw to Giles because I think the reputational risk is about the IT deliveries.
I think the reputational risk is not about the fact that it's government funded, it's the fact that our ability to implement successfully on the due date. And that's all we're completely focused on that. And obviously government changing dates in one way has helped us. It's given us a bit longer, but it also messes up when we were kind of, most of the work has been done. Just to come back to NTS to support Brian. Obviously NTS is a multi-year program for this organisation. And we had assumed we would be going earlier than we are now going. Because of the delays that took place to sign the contracts, we are now due to go live middle of 24 is the current plan. Our steering group meeting this morning. I'm also keen going forward as we progress to pull things like NTS out so that we don't confuse the performance of the service with what is quite a separate and distinct project of work that needs to be done. And I also just use the opportunity. Yeah. I just wanted to highlight to councillors, particularly new councillors, that this is the first time I'm aware that we have done a 6+6 forecast. In previous years, the first reforecast has been an 8+4. So this year we've had a 3+9, we've now had a 6+6. So we're actually trying to give greater visibility to management and to councillors about where we expect the year end to be from a financial perspective. And obviously, given that that's a change in the way that the organisation's worked, that is a learning experience for the finance team, but also for budget holders. And we will get better at this in years going forward because we'll have more experience about thinking about the implications of decisions that are made during the year.
Can either be left as a comment to be pondering on or maybe a question you can answer. But so we had a proposal that with cutting rates for went through a whole load of consultation around several groups receiving a concession and mean getting childcare rate that we've now put on pause because and also the zone taking away zones, and it's gone on pause. From 1st of July, we've got one portion of our concession group that we'd identified will be getting a concession. So is there a risk there that we've collected rates to deliver to a wider group of people than what we're going to now be delivering on from the 1st of July? And so, yeah, can we be thinking about that and what? And yeah.
We consider that. It was raised by another councillor a couple of weeks ago when the government's announcement was made to extend the fare reduction. Our view is that the council is still committed to the fair trial, and so those monies are still being collected and are going into reserves. And clearly, should the government continue to extend the fair trial, then we will revisit that decision with council and make appropriate adjustments to the financial arrangements. But at the moment, as far as we're concerned, the council decision is, all we've done is defer the implementation for, as you know, very good reasons.
Yes, Scott.
But just a general question, I guess, around national ticketing and risk. Giles, not so much Brian, but Giles. Have we got enough sufficient resources to deliver that under the pressure that it's under?
So you're obviously listening in on our steering group meeting this morning. We are acutely aware as a region, as other PTAs are, of the resource pressure to deliver this. So we had a conversation, myself and Taff sit on the steering group, that we are looking for the project to give us a very clear resourcing plan, and that we will then work with our colleagues at the executive team, but also nationally, to ensure that that resource is secured and provided. We are very keen, as are the other PTAs and as are Whakamutunga, to treat this as a national programme where we will succeed or fail together. And ultimately, we are phase one of what is a programme that will run through to 2026. And it has to be resourced to ensure particularly that transition and that customer engagement works effectively.
And I guess the other bit that I'm quite interested in, but we don't need to answer that here. It would be nice somewhere along the line to look how that workload is being shared between Whakamutunga and other TAs and ourselves. I know if you're in front of the queue, you're desperate to make it work. if you're waiting for it to work and then accept it, then you're probably not so concerned.
I sit on the National Steering Group. We meet monthly. I'm up in Wellington next Friday for the next meeting. Resourcing is an issue nationally. We also talked this morning about what is the cadence of reporting and visibility of that programme to not only this council's transport committee, but also to the Greater Christchurch Partnership, the Regional Transport Committee. What is that cadence, and how do we ensure appropriate visibility and engagement, and how do we ensure that Whakamutunga and the programme attend to provide their perspective on what is a collective partnership? I would say that it is a great opportunity for regional government and national government to demonstrate that we can deliver things in partnership, and we are certainly determined to make it a success for Canterbury.
Just to note, Mr. Chair, that I have a catch up with Nicole Rosie next week, so maybe it's an opportunity to pull a little governance lever. And if there are some concerns, maybe we should discuss those and we can drop them into the conversation somewhere. Thank you.
Councillor Mackenzie.
Well, question sort of along the same lines, but to do with the wild and conifer program, because I read that the government is pulling their support for that program, and I'm not sure the details of that, so I may have that wrong. But if that is the case, what is the risk to this organisation in terms of not achieving the investment we've already made, or B, in terms of the extra funding we might have to provide as a regional council as opposed to central government to actually try to secure the investment we've already made in that. Now, and this may be the wrong place to ask the question, but the risk question is appropriate, but the answers might need to come from the biodiversity portfolio, in which case I'm happy to suggest that maybe that you ask those questions and then we can report back somehow.
Yes, we are aware that the government funding of the program is running down. I think it's going to be down to about 3 million in 23-24. So yes, there is thinking being done around how that funding will be replaced and what the impacts are if it cannot.
Just in line with that, my understanding from talking to groups on wildings is that we're halfway there. Like, I think there's might have been 36 million spent, and they believe there's a quantum of about another 35 million required to actually break the back of it. So it's significant money. It's not just 3.5 won't do it for us. And the other concern that we raised also with Southland, Otago, and ourselves was the fact that that workforce that's been doing such a good job on that. It'll be lost to us, and it's hard to start it up again. Sorry, Stephanie.
Thanks, Peter. If there's no further questions, Brian, you may leave the table. Thank you. I'll put the motion. And that's on page 80. That the Audit, Finance and Risk Committee 1 receives the portfolio health and financial health report for the period ending 31st of January 2023, and 2 notes details of the 6+6 forecast for the year to 30th of June 2023. Is there any further discussion? No further discussion. All those in favour, please say aye. Oh, sorry, whoever seconded. I'll put it. Okay, second. Councillor Southworth. All those in favour, please say aye. Aye, carried. Thank you. Uh, 8.8 key projects report to the 31st of January 2023. Giles, are you talking to that?
So this is the monthly report on the critical projects that the programs that have been identified by ELT and the council. It is still work in progress, particularly around the way in which we present the financials. So I apologise for that. Important thing for me to note, or for the committee to note, is this is an overview provided to help the AFRC discharge its assurance role across the whole organisation. The individual projects or programs are, if requested, reported to the individual portfolios concerned through the committee structure, recognising that there is still obviously further work to do in that space to ensure that financial and performance information flows appropriately through that committee structure to support council, and then AFRC can discharge its overarching assurance role. Happy to answer any questions if I can.
Thanks, Josh. Just the question I've got. So what you're suggesting is that maybe more detailed questioning of the project status would be best through the portfolio.
I'm going to sit down with my with Gaynor, who's the manager who pulls this together for me, to ensure that we're clear about the flow of these projects through the committee structure, working with the portfolio and the lead directors, making sure that there's a very clear way in which this information is presented, both performance and financial, so that the right things go to the right places. But it's work in progress.
Councillor Southwood.
I just wanted to clarify where key risks are identified. So I know, like, for example, when you do health and safety, you sort of think about what possible things might happen, and that's the risk, you know, plausible ones, but nevertheless things haven't necessarily occurred, but that might. Where in here, some of the things seem like maybe they might occur, or just in the style they're written, or are these actual things that we know specifically a risk that are in train of happening? Some of them are very clear that they're an actual thing, and some of them are written like they might be a thing, but they might not. And so which type of risk is it, a known one or an unknown one?
So what we try to do here is to combine both of those. So a risk is something that might happen, an issue is something that is happening. So actually it's a bit of both, rather than trying to technically you separate them out in terms of there's a risk, there's a possibility that, or there's an issue. This is happening. We are in a position. So this is trying to combine the two in terms of how do we identify them. Each of these programs, if we're following appropriate methodology. So, as I said, I was at the NTS steering group this morning. We have a risk register. We review that risk register every 3 months to make sure it stays up to date. At every steering group meeting, we review the risks, the key risks, and have a conversation about them to make sure that they are being managed and mitigated. That's separate from that strategic risk conversation that we're having with council around these are the big things that could impact the organisation. And then one of those is health and safety. We'll have a set of, so risk is quite complicated. Yeah.
But I just from I think from a councillor point of view, and colleagues can perhaps comment, but it sort of feels to me like it'd be quite helpful where we're talking about an actual project that could have actual current occurring risks, and also having the same set of bullet points, some things that we think could happen but haven't, but we're keeping an eye on. Be quite nice to separate those two things out, not least so we sort of, because the risks that are actually happening are things we might get asked questions by constituents about and things like that. So it'd just be quite neat if there's a way of maybe italics for one and normal for other or something. But
we can certainly work on that. But something is actually happening is an issue. Something that might happen is a risk. Yeah. But it says it's risks and issues. Key risks and issues. Yes, we can split them. Yeah.
Thanks. Are there any, just looking at all of these, there's quite a few of them that are weather dependent in terms of risk, which is obviously very tricky. It's delaying projects or causing issues. But I think it's a good suggestion to Councillor Southwood. Any other questions? No other questions? Then I'll put the motion that the Audit, Finance and Risk Committee notes the key projects report for the period ending 31st of January 2023. Any further discussion? None. Seconder, please. Councillor Southworth. All those in favour, please say aye. Against? None. Carried. Thank you. Report 8.9. Audit Finance Forward Work Plan. And Stefan, if you could come to the table, thank you.
Thank you, Chair. So it's my pleasure again to just propose the new 12 or draft 12-month work plan that we are proposing. So this ultimately is a work plan of all the agenda items that we will be considering in these meetings for the remainder of this calendar year. And as with the internal audit plan, it's a rolling document, so that this can be amended as and how it sees or it's needed. So I take it that this has been read and happy to answer any questions.
Councillors have any questions on this report? There doesn't seem to be any questions. So thank you, Stefan. It's very clear where you're headed and the anticipated delivery dates of various performance investigations. So thank you very much. Do I have a mover for this? Moved. Councillor Sunkel, seconder. Councillor Robinson. That the Audit, Finance and Risk Committee approves the Audit, Finance and Risk Committee's rolling 12-month forward work plan. Moved by Councillor Sunkel, seconded by Councillor Robinson. All those in favour, please say aye. Aye. Against? Carried. Thank you. We'll move to item 8.10. Stefan. Thank you.
Thanks, Jay. Yes, effectively, this is just the newly recommended terms of reference for this committee. So again, I take it everybody has read this and happy to answer any questions or ask Charles to answer any questions if I don't have the ability.
Anyone have any questions? No questions. I'll move that I'll move the resolution that the Audit, Finance and Risk Committee 1 receives and approves the changes to the draft Audit, Finance and Risk Committee terms of reference, and 2 recommends the changes to the draft Audit, Finance and Risk Committee terms of reference are presented to the Council for approval. Do I have a seconder? Councillor Sunkel. All those in favour, please say aye. Aye. Carried. Thank you. That's good. Now move to item 8.11. And I call Catherine McMillan to the table just to discuss the notification of items released from Public Excluded.
Thank you. This is notification of items to be released from Public Excluded. They have previously gone through a Public Excluded agenda and have now reached a point where they are available to be made into the public domain. So we're bringing them in for public visibility.
Any questions of clarification? None. Cool. We're really just receiving this report. So if there's no questions, I'll put the motion that the Audit, Finance and Risk Committee 1 receives the report as notification that the Public Transport Investment Audit Report presented at the Audit, Finance and Risk Committee meeting on the 18th of February 2021 has been approved for release to the public, excluding Appendix B. Have a mover. Councillor Robinson, seconder. Councillor Sunkel. All those in favour, please say aye. Carried. Thank you. I have a mover to go into. We'll go into item 9, public exclusion. Do I have a mover to go? Councillor Karakia, seconded. Councillor Sunkel. We'll now move into public excluded, and we'll reconvene shortly. Well, welcome back to the meeting. We're now returned from public excluded part, and the business we've got now is just identifying when the next meeting is. Item 10. The next meeting of this committee is programmed for the 26th of April at 1 o'clock, and any times, any changes to this time will be notified by people. I'm wondering if we could have a closing Karakia from Councillor Mackenzie. Thank you. Expectations.
Kia tauna manakitanga ate mea no naro. Uranga ki tina atatu. Kia mahia te hua ma kihi. Kia toi te kupu, toi te ta mana, toi te arawa, toi te reo mari. Kia tuturu, kia whakamona moa. Iron writing, apologies. Kia tina huie takie.
Thanks, Ian, and thanks everyone for attending. And thanks to staff for staying for such a long time.